Right traders, welcome back to the Liquid FX YouTube channel. Here we have our regular Forex outlooks for both pound dollar and the euro dollar. So this video we're going to be switching it up, looking at the pound dollar first, right? So what do we see here in price, right? So again, to quickly go over our four pillars that we've always spoken about when it comes to determining a higher time frame bias. We have bearish structure from this swing high down to this swing low over here. So let's quickly mark that out. We have bearish structure confirmed by this breaker structure over here. We have a bearish dealing range from this swing high down to this swing low. Anything above this 50% level is of course a premium. Anything below is a discount. And so if we zoom into most recent price action again, what we have is we have a demand chain. Now, what this means is we have simply a fair value gap that gets produced over here. It gets respected and we see price pushing up again. We see price reacting off a fair value gap and then bouncing higher. So now we're at an interesting region where yes, we're in the premium. Yes, we've reacted off this particular fair value gap in inefficiency, but we haven't seen bias commit, as in we haven't seen the higher pricing we'd expect from, as in like we've seen from this demand zone. So what does that mean in price? Well, from here, what we need to consider is that we have two draws on liquidity. We have a bearish draw on liquidity because this is a weak low. Again, this low hasn't produced anything. But also we have a bullish DOL. We have a bullish draw on liquidity because this high over here also hasn't broken a low. So we have two potential scenarios. Of course, that's not very helpful. That's not very useful because the markets can only move up or down. So to analyze this pair in a deeper fashion, we have to now go down to the daily time frame. So the daily time frame, again, we look at the fact that we've had our structure break to the downside. So again, this is our current dealing range. So we have a dealing range high and we have a dealing range low, just like this. So right now we are in a premium, so we're above the 50% level. So this gives us a validation to look for potential sells. So the way that I see GBP USD going into the following week is the following, right? This is the following things you want to write down in your notepads, right? So we understand we're in a daily premium. Now, when we're in a daily premium, sells become valid, right? From this point, when we're in a daily premium. The second thing we want to understand is that we want to be understanding, are there any fair value gaps in the discount? So we want to be looking at fair value gaps. And the third thing we look at is liquidity. For those who have seen my previous videos, we understand that the IPTA, or the interbank price delivery algorithm, operates from inefficiency to inefficiency, liquidity pool to liquidity pool, from premium down to discount. So the overall narrative I have for GBP USD is the following. I expect price to get down to this kind of level over here, right? Because we have fair value gaps over here. We have a discounted fair value gap over here. So this now becomes a daily point of interest, or a daily zone, which we need to be mindful of, right? So we have a daily zone just over here. So if I label that in green, this is a daily point of interest or a daily demand zone, right? Daily point of interest. So if we just label that over, we bring that to the right. I expect this POI to be mitigated over the next 1 or 2 weeks. So expect lower prices down to here. Now, this particular POI is priced at 1.256. 1.256 is the next overall price action which I expect to be hit, due to the fact that we have a discounted fair value gap which we expect to be mitigated in the next few weeks. So now if we head down to the 4-hour time frame, the 4-hour time frame, again, we have bearish structure, right? We have bearish structure from this dealing range high down to this dealing range low. And now from here, what's happened is we had an inefficiency over here. We had a bearish imbalance, sorry. That's of course been filled from this region over here. So this was the mitigation. This was the fill of the inefficiency, right? So the way that I'm currently looking at prices like this, right? Again, the 4-hour paints a very similar to that. Paints a similar picture, sorry, to that of the daily time frame. Where what we see is we see a 4-hour premium, right? We've filled an inefficiency, right? Fair value gap filled, right? Very important to understand that. So where we reacted from, or where are we going towards? So we have a 4-hour premium. We've just filled a bearish fair value gap, and now we also have an FVG to target and we're also in a premium, and now we're going to be aiming towards a discount. Of course, we also have liquidity to consider. Now, we have a very clean liquidity pool on GBP USD, right? So that's this lovely trend line over here. I expect this trend line to be swept, and I expect price to come down to, like I said, on the daily time frame, at least down to this zone over here. So I expect lower prices from this zone. Then from here, it's likely we're going to see a bullish reaction, okay? But again, this POI is marked at 1.256, right? So 1.256. So this is the overall narrative we have on GBP USD or pound dollar, right? So understand we're using the simple concepts of premium to discount. We're targeting liquidity. We're targeting fair value gaps. That's all we're doing, right? It's a simplified edge in the markets. So now if we take this same ideology, right, and we apply it towards the euro dollar time frame. So the euro dollar, let's start with the daily time frame. So the daily time frame, again, what we have is we have bearish structure over here. We have a dealing range high up here. We have a dealing range low down here. So what we've had over here, we've had price break structure to the downside, and since then we've retraced into a pretty deep premium. We didn't come all the way to the extreme POI, which is fine, but we've come into a deep premium. Now from here, what's happened is if we look at internal structure, it's important not to get the internal structure over here mixed up with the external structure. So this is the external high. This is the external low. So let's quickly mark that out so people can understand. What we mean by external structure is essentially the dealing range. So we've got the swing high down to the swing low. This here is our parent structure. So this is the parent structure. Anything inside of this is internal structure. So what we've had over here is we've had internal breaks to the upside. We've had pullbacks into discount. We've had internal breaks to the upside coming into a pretty firm premium price before breaks of structure to the downside 1, before breaks of structure to the downside 2. And so what we have over here is important to consider the next daily drawn liquidity, which is the most powerful thing in your trading. The next daily drawn liquidity is essentially this trend line over here, because if I quickly extend this over to the right, this is a drawn liquidity over here. This red line is a drawn liquidity. Now, what makes it a drawn liquidity? Well, if I bring your attention over here to the right, what we need to understand is that every single low in the market has to break a high, right? It has to break a high. So when you look at this low over here, the dealing range high is all the way up here, right? And even if you look at internal structure, our internal daily structure has given us a bearish break, a pullback, a bearish break, a pullback. And now as we're heading lower, you want to ask yourself, what is this low over here actually achieve, right? What does this low achieve? This low here is known as a weak low. And the reason it's a weak low is because it hasn't contributed to breaking any of the previous either internal highs or the structural highs all the way up there, right? This is the previous internal high. Price is given a pullback. It's not come and broken this, and therefore it is weak. It is really that simple if you understand basic market structure, right? Structure, dealing range, PD arrays, and fair value gaps. It's a simple trading edge which allows you to determine a bias, and it's very, very powerful, right? So again, what we see over here is we see price trying to reach up higher, but it hasn't quite broken the last high, right? The last internal high. And therefore, when we're in this region, what we understand from here is that we have a weak structural low over here. This is a weak low, and this is a weak low, all right? And this is why we target it, right? So I expect price to come down to at least this weak low over here, but the ultimate target is this daily fair value gap. Price left a daily fair value gap back in November of 2023, and I expect the inefficiency or the fair value gap to be filled. So this overall target now is at 1.058. So let's label that 1.058, right? So for those trading Euro USD and GBP USD going into the week ahead, I have a bearish bias overall. Again, that could change subject to news, so don't take my word as gospel. Do your back testing. Do your research into these markets and the 4 pillars, right? Let's finish on this point over here. The 4 pillars of the market, right? You need to understand, right, your market structure. What is your market structure? Identify the highs and lows, right? Then you want to look at the dealing range, right? The dealing range is the most recent swing high and the most recent swing low. So that's, again, this swing high here and this swing low down here. Anything else is internal structure. Very important to understand that. So once we have our market structure, our dealing range, the next thing we want to look for is we want to look for our premium and discount arrays, the PD arrays. Premium and discount. And the fourth thing you want to look for is your inefficiencies, right? So every chart I mark up has these four things attached to it, right? We understand our structural dealing range. From the basic structure, we understand our 50% level is over here. Anything above that will be our premium fair value gaps. Anything below is our discounted fair value gap. So trading really is that simple. And determining an edge is really that simple in the markets. Determining a bias is really that simple in the markets if you just follow the 4 pillars that I provide in almost every single video.